The markets are continuing to bleed today on the back of some poor guidance from Meta. We have Q3 GDP numbers out today. They're not as pretty as the headlines are painting them. We're going to be discussing all of that and more today on Money Never Sleeps. Welcome back, everybody. Thank you for joining us yet again today. Before we get going, hit that like button down below, subscribe to our channel. Nothing Kevin or I say is financial advice, so please do your own research before making any sort of buys or sells. Kev, we have some data to discuss. We have earnings in the spotlight as well. We have a big day tomorrow with PCE getting some more personal income, personal spending data, Amazon earnings this afternoon after the close of the market. Where do you want to go first? I'm going to give you, you want to go earnings or economic data first? You're on mute right now.
Sorry, I was screaming as I was saying that too. Let's do economic data because I think that's the important thing, and then we'll get into the earnings after. Look at the charts.
Okay, so we had some different economic data today. The most important stuff was GDP. We saw like some durable goods stuff that came in higher than expected. We saw initial jobless claims come in a little bit over expected. We saw pending home sales come in a little bit over expected. But what I wanted to get into is these GDP numbers. It came in for the first reading of Q2 at 4.9% GDP versus 4.7 expected and 2.1% in Q2. The increase, and I'm reading some of this is going to be directly from the report today, attributed to increases in consumer spending, private inventory investment, federal government spending, as well as increases in exports and residential fixed investment, blah, blah, blah. All anyone cares about is the 4.9%. But I think we need to look a little bit deeper. We need to do a little, we need to take 5 minutes to read a little bit deeper into some of these things to get maybe a better picture of what is going on now and in the future. So what caught my attention was around income as well as personal savings. So disposable income was up 95.8 billion, 1.9%. People are like, oh, that's good. It was up. Well, that's compared to in Q2, 295 billion, which was 6.1%. So that's not great. We're seeing the personal income, disposable personal income going down. Real disposable income actually decreased 1% compared to a 3.5% increase in Q2. So also not good. Now let's go to savings. This is what we've been talking about a lot when it comes to people not being able to pay their credit card balances based on what we've seen from earnings reports, people struggling with savings rates from some of the Fed reports. We have personal savings in Q3 was 776.9 billion. That's compared to 1.04 trillion in Q2. That is a sizable decrease. If you look a little even further into that, personal saving as a percentage of disposable income was 3.8% in the third quarter. That's compared to 5.2% in the second quarter. So we are seeing people making, income is staying about the same, but they're saving less because they have to pay these bills, which they're accruing higher interest on, which we're going to continue to see be the case until the Fed has to pivot. And that's either as a result of inflation coming down or something breaks in the system. I'm leaning towards the latter happening first, based off of everything that we've seen so far and everything going on in the world. That's what I have to say about GDP. Kevin, I'm curious what your response is.
Yeah, I kind of agree with you. I think the consumer's fucked, and that just rolls all the way up to the top, and it screws everyone on the top all the way down too. So it's the numbers, the headlines. I was telling you before the show, I think that these headlines are really grandiose and like they want you to think that things are better than they actually are, right? And we know that once we dig a little deeper under the surface, we can see that there's actually a lot of things that are showing that there's a lot of strain on this economy, both from retail all the way to corporations, all the way up to central banks, right? Institutional banks as well. But I think that what we're kind of seeing, and even Janet Yellen coming out today, bowl cut, she was saying that I know that the consumer is worried. Americans are worried about their finances. However, I still see the United States in a strong place. The economy's in a strong place. Well, yeah, we've also seen that story told before. Hank Paulson said that in 2008. Next thing you know, we were in the great financial crisis. So I think that we're seeing a lot of these headlines and things kind of making people believe that, okay, things are actually better than they actually are. But then there's going to be something that just absolutely breaks. It's like everything was going great until this one thing just sent the market down, and they're going to blame it on everything. I don't know if that's what happens in the Middle East, Russia. I don't know if there could be a multitude of things that happen, but I think that's the way that we're heading because these numbers underneath the surface are just not lining up with what they're saying, and it's very scary.
You have to, as always, ask what the motive is behind what these people are saying in regards to this economic data. And we know what the motive is for anyone in politics. It's either to blast the Democrats if they're Republican, or if they're a Democrat, to praise it and be like, "Hey, look how good we're doing." You need to think more critically. You need to look deeper at it, and you need to ask, "How is this going to affect me, and what do I need to do?" Because guess what? No one is coming to save you. Like it is, you got to do what's in your best interest right now. And I can tell you how I'm participating in this market. I'm doing very little. I think this is a do less time. So much is up in the air. And one headline, one piece of news that you can't see coming could move the markets dramatically. So this is not risk on time. This is a time to, be defensive to an extent, in my opinion. That's just what I'm doing. Uh, have cash on hand to where you can accumulate assets if and when they become at a more they are at a more attractive price, because they will be. We will, things will turn around eventually. I don't see it this year. I'm not sure about next year. Maybe we'll be talking about it in 2025.
Yeah, I mean, just it's dangerous out there. I'm even me, one of the most aggressive bears that's been in existence for the past year and a half. I'm thinking about, you know what, man, this could get really bad. Is it smarter at some point to say, you know what, even though the payout could be amazing, is it better to preserve capital in some areas? Something that you should be questioning yourself because, like you said, one headline is all it takes, and that's going to just set off dominoes. It's going to be contagion from every industry. I mean, one thing that I think a lot of people aren't really saying is that a lot of companies are both filing for bankruptcy and they're also laying off tons of employees, right? That's only putting more strain on the economy and, people like you and me or people who just don't even invest, right? And again, who's holding up the economy? It's usually the middle class. Obviously, they can't afford anything, then it's going to bleed up to corporations, and then it's going to bleed all the way back down, and they're going to lay off more people, and it's just a vicious cycle that we're kind of playing into right now. So definitely be careful right now. Nothing is secure, let's put it that way. Nothing is certain. That goes from finances to your job to anything in the market right now.
Yep, absolutely. On the note of layoffs, let's talk about Meta earnings because they came in incredibly strong this week. We
Yeah.
saw revenue at 34.15 billion, up 23%. Net income 11.58 billion. That's up 164%. Both those numbers far outgained the expectations from Wall Street. Big part of that is, at least on the net income side, big layoffs and an increased use of AI. And this is, I mean, we've been talking about this for how many months now? And so this is something that Meta is using, and they're using it effectively. Like, I'm not planning on buying Meta anytime soon, and I probably never will because I just don't like Zuckerberg and I don't believe in them, and I don't like invest in companies that I have an ethical difference in. But if you can look past that, I think that there is going to be a great opportunity because Meta is putting a lot of things in place for the future, in my opinion, with how they're utilizing AI, with the strength of their ad revenue, how they're generating ad revenue across these different mediums, the way that they're targeting things. Like it's just, they're doing, I can't say that they're not doing a good job because they are. Now, they did say that they're part of why they're down the way that they are today is because they are concerned about the Middle East, what is going on there, how that's going to impact Q4 ad revenues. So, maybe you get a good buying opportunity on Meta in the coming weeks and months. Like, once again, I'm not going to be participating in it, but I do think there's going to be value here fairly soon. And I think there's absolutely opportunities to potentially trade this as it begins to go down. I'm looking at the daily chart. We got quite a few gaps down here in the in the two teens, like the 211 to 240 area. So maybe we got to hit those gaps. You'll get an opportunity down there. I see another one down in the 150s. Maybe we'll hit that. So I think there's definitely an opportunity for that, Kevin.
Yeah, I just pulled up my meta chart. I haven't looked at the meta chart in so long, past down here, and I was like looking at those gaps, like, oh, I had targets written right across right across the chart. I'm like, that's not what I wanted. But yeah, you hit it the nail on the head. There's a lot of gaps down below us, right? And we got a nasty candle today, and it bounced up a little bit. It's only down 2.51%. Earlier, it was down to around 280, 279. I mean, there's still a massive gap right here between 299 and 294. So we're going to have to keep an eye on that as well. But I do think that there are things that we need to be keeping an eye on. Just to be, I've been talking about deviation a lot lately, and that pretty much means double tops or anything that shows you that the price might have seen some exhaustions. So I'm just going to look at this on the daily chart. I'm going to say this right here and this right here. That's a bit of deviation, I think. So we're probably going to see a bit of a rollover. We did. I'm not surprised by that. But there are a lot of gaps down below. And, we've been filling a lot of gaps lately, like from Netflix to, CME gaps. Pretty much all these companies are doing a really good job of filling these gaps where liquidity is sitting. So, yeah, I think that Meta, I'm not personally going to be getting excited about them. I think that it's probably going to have to come down and test the 200 EMA at some point. It's not too far away, granted, where it was earlier, say from 280 to there, 6.1%. It's possible, but I mean, if we look at some of these lower targets, we filled this gap down here. That's 23%. If we want to be super bearish, we can go down and say that's 47% at $153 to fill that second gap down there. And this gap is already filled, but if we want to see, I think this is coming down a little bit too low, maybe. I don't know. It really depends on how bad the economy is at a given point. The COVID lows, it went down lower than the COVID low, but at the same time, we do know that what value does Meta have going forward if a lot of people aren't necessarily have funds? I mean, companies aren't going to pay for ad revenue. We know that the metaverse itself is just bleeding like crazy, despite earnings for the company itself. So, I genuinely think that there's a bear case to say that it comes down to this 85, maybe $71. That's super bearish, I know, but I think that these two gaps down here are very, very plausible scenarios that we could see this roll over and then again finish this massive A, B, C, something like that. So we'll just keep an eye on that, but I'm not going to get too ahead of Meta until we start seeing some of these gaps get filled out.
All right. So that's what we got on Meta. Tomorrow, like I said, personal income, personal spending, and PCE, personal consumption expenditures. That's going to be tomorrow. We have some expected numbers. I'm really interested to see what the news brings, how the market reacts. We do know that the U.S. found out recently deployed some troops over to the Middle East. Things are getting scary there. I don't know, man. It's hard for me to really care about what's going on in the markets, but at the same time, this is what we got to do. Like we got to do what we got to do. We got to look out for ourselves here. So it's a scary time in these markets. There's so much uncertainty, and as we know, TradFi markets hate uncertainty. So that is why we were seeing so much volatility. Is people are really unsure of where to keep their money right now if they want to keep it in risk assets. And based on the movement we were seeing today, the answer to that question is they do not.
I think that was a great way of putting it. Yeah, I mean, we're seeing a lot of signs that risk assets are not the answer right now. It was pretty interesting to me. I saw some of the treasuries were down earlier today. I thought that they might have been up a little bit. But it's a really weird time in this market because we're all seeing the dollar pull back while, a lot of these major indices are pulling back as well. So let's just pull up the dollar real quick and then we can get into some of the major indices and
People are
stocks.
gobbling up these shorter term treasuries. That's why we're seeing some of the, the percentage moves that they're making right now. Like people want to be getting a guaranteed 5% over the next, year or two. Like there's
Yeah.
just a lot right now who have no problem buying bonds and, driving the rates down a bit.
Yeah, that's a really good point too. I mean, if we're not seeing the yields go up any higher here, then that means, hey, maybe there's a little bit of pressure on people buying bonds themselves. So it's a good point. I think that there still is room for yields to go up a little bit more. I think markets aren't necessarily completely spooked just yet, but that could all change in a minute's notice, right? We get bad news tomorrow, and yields start crashing down, and we start seeing equity sell off because equities are fairly expensive here compared to 5% yield, right? The dollar right now, we can see that it finally broke out of this channel right here, this parallel channel. This was a bull flag. We called it. Went all the way up to 106.89 earlier today. It's currently trading at 106.64. A little bit interesting to see how that plays out. It pulled back a little bit. I tried looking at other Forex currencies to see what's happening. Same thing happened here for the euro. It was down here and it pulled back up. So there's a little bit of variation. The big one I think that it was important that we saw yesterday was that we are well over the 150 mark for the USD JPY, the Japanese yen pairing. This was kind of a level that the Bank of Japan was trying to intervene and keep from, absolutely hitting. It's well above it now. Now the question is, what is the Japanese Bank of Japan going to do here? Well, one thing could be they could sell treasuries, right? And then they could try and save their dollar. They could be raising interest rates there. So a lot of things that are going on. The problem is 150 to 1 when you have, wages that are not necessarily increasing for the people over there. And you're also seeing an aging population. That's a recipe for disaster, right? And now we're seeing that Japan is also getting involved somewhat in this war as well. Not to the extent that the United States or China or any of these other countries are, but they do have exposure to it. I think this is kind of a recipe for disaster for Japan. They would have to do something extremely drastic that could bring this to a decent level to the US dollar. But again, the US dollar, even though it's pulled back very little today, it's still doing extremely well. I mean, even if we look at gold right now, which we're looking for risk off assets, gold is, up still $4.18 today. It was up a little bit higher. I still think that we get a shock. This is going to just let gold go up a little bit more. It's a very dangerous place right now, I think, for other currencies that aren't the dollar. And that's not financial advice. It's just what we're seeing. The dollar is remaining extremely strong. When you see that gold is strong, I don't know. I think that we have to be cautious here when it comes to trading any forex, and even the dollar. I will say be cautious because if there is a yen carry trade where they absolutely start offloading U.S. treasuries, then there's a good chance that the dollar could take a bit of a dip. So we'll have to keep an eye on that. But yeah, that's what I'm seeing in currencies. But let's look at some important things right here. Now, this is the Dow on the daily, and I'm bringing this up because it's been terrible. It's been bleeding out like crazy. You can see that we almost have a daily death cross, right? And the reason I bring that up is because every time there's a death cross, we tend to see, right before, right after, a pretty good drop in the market. We got a death cross here back in March 2023. Obviously, the banking collapse. There we go, right? We dropped roughly, let's say, from the height of that move there, right here, down here. That was about a 6.5% drop. So very interesting. We got a death cross back here in May of 2022. Let me just pull this up again. And then I'll go obviously to the more important times, 2001, 2008. That's a 16.4% drop that we saw back in May of 2022 to the low back here in June of 2022. So that's very interesting to see there. Let's go back in time a little bit. Here's one from March 2020. That's obviously the COVID crash, but we got a death cross and look how deep it went. I'm not even going to measure that up because that's a pretty good drop. That doesn't have to be measured there. We all remember that. But let's go to 2008. 2008's obviously the great financial crisis. We can look at, I think it was 2007 to, yeah, it's right here. All right, so we got the height of the market there. It's 2007, let's say from this mark here, December. I got to see a bigger drop than I thought. Let's go here and say all the way down to the bottom of the market was a 53% drop. So these things, I mean, and I didn't skip really many. I mean, even one that's right here, the small one, let's go from the top to bottom. That's an 18% drop too in November of 2011, which would have been post credit downgrade, right? So I think that whenever we see these death crosses in the Dow, which doesn't happen often because there's so much liquidity in this market, there's so many people that are just adding into the Dow always. When we do see death crosses, they tend to be pretty drastic. I mean, 6% is a huge move, I still think, but you've seen other places in history where it's dropped, substantially. That's just the way it is. I mean, even right here, let's see this, March 2002. I mean, that is right here, 31% drop. So there is definitely something to this when we get a death cross. We're days away from a death cross. I'll say there's a good chance that we could even see the 50 and the 200 EMA touch tomorrow. But we do know that equities are expensive right now and people are scared. And there's a lot of uncertainty in this world. Could we just pump up out of this? Sure, it's likely. But as we've seen throughout history, it's not possible. It's not very unlikely that it doesn't. So, I mean, even here, we did pump out of it here and then eventually they were coming back. But this move, even in February 2023, like I said, the banking crisis, that's 8-9% drop from February to that low. So I think that there is definitely concern here for the Dow. We can see here on the NASDAQ real quick, we are below that key level. So we're breaking out of this descending triangle. We're finding some support on the 200 EMA. If that doesn't hold, then obviously hold your hats. That's going to be going down to maybe 13,716, which is support that we found here back in August 2022. But I mean, breaking this is a huge level. That's very concerning. And it was down a lot more today. It was below the 200 EMA. It was down like 330 points at one point. We're seeing the S&P absolutely fall. I warned everyone about this a while back. I said that under 4250, we're going to start seeing a lot of selling. Here we are. We're almost 90 points below that. And, you know, it seems like we're just seeing constant red days for the past week or so, a few green days in between. But for the most part, we cannot find any support on this line. So it's resistance now. We got a death cross that's also looming for the S&P. And I'm going to bring this up too, but you and I a while back called the top of the market for TradFi back in the summer. We said that, okay, we don't think that it's going to go up any higher.
July. That was back in July, right?
It was. And since it's down over 10%, it's like 10.2% or something like that. So I'm not trying to toot our own horns or anything like that, but I'm just saying that there was a lot of signs that are leading up to this. And a lot of people are trying to say, oh no, it's a healthy correction. We don't know that yet. There is just so much on the table that we need to be cautious of. Last thing I'll look at in TradFi, and then we can move into something else real quick. NVIDIA. And I hate to say this because I know you are a huge NVIDIA holder. I didn't necessarily look at this because
I'm just kidding.
Dude, I didn't create this pattern. The market did, the world did this. But look at this. That's 3 Christmas trees. That's also known as a head and shoulders pattern. I mean, it's already hit the neckline. That's a good chance that this is going to break down. I'm not saying it's going to go instantly. Obviously, you can trade sideways for a few days and then break down. But you're first going to be testing this 200 EMA. And there's a gap. There's a massive gap here. There's no support, and this has to be filled out because there's just so much liquidity. And I'm saying this if in the least worst case scenario that this is going to come down. So from where we currently are to the top of this is about 10%. To the midline of it is about 15, obviously 20%, 21% for the bottom move. That would fill a ton of liquidity. Is it over at that point? We don't know. We genuinely do not know. I mean, it could, even if it really wants to go lower. But the problem is we're seeing these big companies report earnings and it doesn't matter. It didn't matter for Meta. It went up real quick, and next thing you know, post market it was down, and then it was down even earlier today. It's up a little bit right now, I think, or it's not as bad as it was. And we just know that these are the ones that have been holding up the market. If they're kind of showing signs of weakness, everything else is going to be showing signs of weakness. And I think there's truly one more company that could definitely bring this market down. Obviously, if Nvidia eat shit, then I think everything's game over in that respect. But I do think that an Apple or an Amazon just gets bloody earnings. Good luck, guys. So that's why I wanted to bring up NVIDIA, because this is one that's not showing signs of strength. We know that earnings are coming out later in November. I would be concerned about any of the big boys that are leading up before this one reports earnings. Amazon is one I'm really interested in seeing because, again, that has to do with consumers and seeing how they're spending.
We got Amazon today, and we got Apple 1 week from today. So there is definitely
Apple's bad, man.
Opportunity there.
Tim Apple, I don't know if he can hold it up for us. That's
MA
10 was it 10 bucks for Apple Plus now for a terrible streaming service that has like 2 shows. Makes no sense.
Oh, dude, are you serious? I gotta disagree. There's a lot of good shows on Apple TV Plus. Like honestly, like I'm being serious. I mean, Ted Lasso.
That's the only one I like.
Shrinking is a really good show.
Oh, the Harrison Ford one?
Yeah, that one's really good.
Okay.
There's another one that my wife and I are watching now. They've routinely, like for the last, I mean, since like February, they've had at least one show on at all times that my wife and I are looking forward to watching every week. So I like Apple TV. Like I think they have some good stuff. They're doing a lot with MLS. I think that is going to be a positive long term. But no, overall, I don't think that's enough to like keep the stock propped up if earnings come in looking like shit.
I just want to see this King Kong Godzilla TV show, and that's about it. That's all I care.
Now?
Yeah, there's like what's it called? Monarch. It's coming out in November. So all the Godzilla King Kong movies are in theaters. They're doing like a spin-off TV series about the company that, I don't know. It's really cool. I like monsters and stuff like that. So I'm happy seeing a Godzilla TV show on Apple Plus. So that, Ted Lasso, I'll check out the others. I'll take your word for it. But still, I think Apple is rotten to the core, and they're done fucked in the stock market if they have bad earnings. But yeah, do you want to do some crypto right now?
Let's run through a couple of crypto charts before we wrap this up.
Definitely. crypto had a bit of a pullback last night, right, into this morning, and we could see
It
that we
had a
lost.
well, it had a bit of a rip up this morning. Like Bitcoin hit 35K again, ETH hit like 1860, and then it just immediately came right back down.
Oh yeah, I must have been sleeping at that point, but
Yeah, I just looked at the chart and saw it. It was like 2 a.m. my time, so I'm not going to be
yeah,
up at that time. You.
I went to bed early last night, so you should be proud of me.
Look at
It's
that. You're getting, see, you're going to be a better trader when you get some freaking sleep, man. Like,
I'll
you
be a better
gotta
trader.
go ahead.
I'll be a better
Just go ahead.
trader when Binance is out of my way. No, I'm just kidding, but no, I'm not also. But yeah, this is Bitcoin on the hourly chart. I just got to pull it up because we're seeing this was a massive parallel channel, right? I was tracking this last night and I was just seeing how I was getting exhausted halfway through it. I'm like, this is probably going to break down. Broke down. We're losing the 50 moving average right now. We did see that they did mint a good amount of USDT, probably about $200 million. However, we're seeing the market kind of absorb that, right? We're not seeing any spot buying. We're seeing a lot of selling. We're seeing a lot of money thrown onto the exchanges that's bringing the price down. So what does that tell me? It tells me that, okay, there is a lot of distribution happening up here. We got a little bit of deviation up here too. You see that flipped over. Is this move to the downside done? I don't think so. Obviously, maybe in the short term, like in the hourly and maybe next day or so, yeah, I could push up. I wouldn't be surprised if it does a little scam pump up to 36, that level up here, just to finish this 5-wave move. I mean, this 4-wave move could even be here, and then we see this. There's a lot of uncertainty right now with crypto, and I don't necessarily want to get too set on one idea because I do think that it could break down at any point. I mean, this could push up to right here, and then that we could be done with this entire move to the upside, and then we have to move down, right? We got a massive 5-wave move up. We would have to see a pretty good move to the downside, obviously a corrective pattern, and eventually we'd start our C pattern all the way down. But I'm very of the belief that we are getting exhausted up here. There's a lot of issues that are surrounding crypto right now. We saw that, I think it was Senator Lummis from Wyoming. She wrote a letter to the DOJ, so Merrick Garland, saying that she wants Binance charges considered from the DOJ and then a further investigation into Tether. It's not a great look. Obviously, there's a lot of FUD around both of those. People, I wouldn't say it's unwarranted, but there's definitely some FUD around both companies for years now. Um, a lot of this is regarding what's happening in the Middle East, but let's put it this way. Uh, I think that it's really probably going to be negative for crypto. Obviously, if DOJ does have any charges against Binance, do I think that they go after Tether right away? I don't know. I would think that it'd be very similar to an FTX style where there's a better chance of there being a bank run on one of these exchanges, and then they file charges and they kind of just let them deal their own hands. Like they screwed up, not the U.S. government intervened. That's one thing I can see it playing out. But for Bitcoin's price, how does that impact it? Well, I do think that there's a lot more liquidity to the downside. So if this does start to sell off like crazy, we get some news in the world that's not necessarily beneficial for crypto, then there's a good chance that we could see a bit of a run. Could that absolutely put some of these exchanges that are insolvent, that are doing some of these shady things to rest? There's a good chance, right? There's a lot of market makers out there that are just playing against each other at this point, and they could easily screw each other over, very similar to how FTX got screwed over by Binance. I know FTX screwed themselves, but they blew the whistle on them, and that pretty much led to a bank run. So I wouldn't be surprised if something like that is in the cards for one of these exchanges. But yeah, so big picture, I think that Bitcoin does need to come down. I think that we are way too frothy here. We can see that we're still extremely overbought on the daily stochastic RSI. I think there is possibility for one more move up, but I just don't necessarily want to be the person that's going to try and long this and then try and catch the top, sell, and then go down. I just kind of want to just see how Bitcoin dominance reacts if Bitcoin does push up, still 5402. Last one we'll take a look at right now because I think it's kind of done with this move. It'll be ETH. So ETH had a really good move to the upside, right? And if I look at this on the 4-hourly chart, we can see that there is a bit of deviation. We did put in a higher high from this move. And from what I'm seeing, I see a 5-wave move up. So this would be 1, 2, 3, roughly say 4, 5, which means that we need a 3-wave correction down now. This would be very impulsive. But the thing that's really interesting to me about everything that's happened, Bitcoin obviously put in a new yearly high. ETH did not. None of the other altcoins. I mean,
Link did. Link put in a new yearly high.
Right. Yeah. Links. I think Solana did too, right? Let's see. Yeah,
Yeah, it got to
Solana definitely did.
33.
Yeah, there's a lot of resistance up here. I'm not surprised. Again, still in a parallel channel, but a lot of these didn't necessarily put in a yearly high. And again, I think a lot of people think that just because a few are doing good, that it's necessarily extremely bullish for altcoins. With Solana and Link, I think there's a lot of distribution here. I think these, especially Solana, there was so many people that got burned by Solana. So I mean, from it going from let's just take this wave four up here, $145 all the way down to
Okay,
eight
we're coming
dollars.
up. We're approaching the 1 year anniversary of FTX. Would you look at that?
Yeah, what is that? The 7th or the 8th of November?
I'm looking at the charts, and Solana looks like it just completely started dumping. When was that? When was that? I mean, it started going down in a big way the 6th of November, but like the real bad red candle. So it was that weekend. Like there was stuff
Yeah, the
going
8th.
down that weekend. And then like the 6th, 7th, 8th, 9th, it started to get real ugly.
Yeah, that was when CZ moved like I don't even know how much FTT. He moved it from the Binance wallet or the cold wallet to the Binance hot wallet, and then he came out and tweeted all that shit. I remember you and I was texting you. I'm like, hey, this might not be good. And then we were texting that night, and it was dropping. It was like went from $40. Now it's 22. Now it's 18. And then
Hey
next
man,
day we did that
I'll
show.
always owe you because I had money in FTX, and about a week before was that warning, and I moved that shit out of there immediately. And so,
Yeah,
I mean, appreciate you for that one. But yeah, I mean, if you had bought Solana down at like 820, you're late last
doing
year, you're
great.
still pretty good at the moment.
Absolutely. But I do think that there's a lot of people that got trapped with FTX and all that happens. I wouldn't be surprised if they are absolutely taking profit, getting out of their positions. I saw someone recently that was moving locked up funds uh, to the exchange. I can't remember who it was. I'd be lying if I told you exactly the person it was, but I think I retweeted it. There's definitely a lot of people who had locked liquidity that are getting out of this position. I know a lot of liquidators for FTX are probably very happy right now, getting rid of some of the supply. I'm not surprised. These are great prices, and they don't have to necessarily sell all their supply at one time, but they could definitely take a good chunk off the top and make some more money as opposed to selling Sol at $16. So I think a lot of these did really well because a lot of market makers needed it to do really well. I'm not necessarily convinced on a lot of these alts or anything like that. I don't think we're in a bull run by any means. If there's no spot buying, then there's nothing. We're just liquidity hunting at this point, trying to fish and get people in. So I think crypto is in a very wild state. I'm very cautious right now, but I'm not necessarily bullish by any stretch of the imagination on anything in crypto.
All right. I think that is where we should wrap it up for today. We'll be back tomorrow, same time, same place, closing out the week, talking about today's Amazon earnings, tomorrow's inflation data. We should be joined by our buddy, Mr. House, so the three of us can get into it, talk about, he can kind of update us on everything else going on because I know that he keeps a close attention to all the geopolitical stuff. So looking forward to that. If you have not yet, do us a solid, like, subscribe, drop a comment, share it on social media. I got to make sure I remember the different hand things I'm doing there because that's apparently part of my shtick now. But thank you very much for joining us. I hope you enjoyed today's show. We'll be back tomorrow, like I said. Stay safe out there in the markets, and we'll see you tomorrow.
Take care, everyone.